Okay, welcome everyone to another midweek strategy webinar. This is a test. Make sure you guys can hear me and that you can see the screen. Once I have confirmation that you can hear me and that you can see the screen, I will get started. Irfan says he can hear. Great. Okay, so you guys can see the screen. There's like 6 charts up right now. These are the charts I'm following here intraday at the moment. Screen is blank. Okay, hold on. No screen. All right, hold on. Okay, the screen is now okay. Great. So I'm going to get started. There's a few topics I wanted to cover specifically. One is actually the hourly reversal levels that I refer to. There have been some questions on that, so I'm going to go over some of those. We'll talk about some of the recent trades as well as some of the opportunities that we're tracking. EURUSD obviously is one. Dollar yen's another. Kiwi dollar is another. And then just some general stuff on the euro as well as the pound and the levels that we're at. So something that I do want to show you guys. So I made an indicator some time ago, years ago. Call it the J count indicator, and it's really simple. Okay, all it does is count. It assigns basically a number for each day. Okay, that number can be anywhere from -3 to +3. Okay, these are pivots, right? Just your regular calculated pivots. The pivot point is in green here, and then you have R1, R2, R3, and then S1, S2, S3. And what it does is if you hit all 3 pivots on the downside, that would be a -3 day. So that day's value would be -3. You can see the previous day also was a -3 day, right? So on January 4th, -3 day. On the 2nd, a -3 day. On the 31st, we had actually a -1 day, almost a -2 day. So what it does is you have a number for each day, and then you add have a rolling 3-day sum. All right, so you get basically it kind of makes an indicator out of it. I don't pay attention to it all that often. I scan for certain levels. So each day I'll scan and it'll have, the number, if you made a minus, a really high number. Basically, once you get to 6 or +6 or -6, it's, viewed as kind of extreme. Obviously, the greatest number you can get would be a 9 or a -9 because, you can't. That'd be 3 days in a row of either hitting all 3 pivots on the top side or the downside. Okay, I've actually never seen with a major market, I've never seen a 9. I've seen it in some other markets like India. I've seen it in their stock market and whatnot. Point being is that when you get a number greater than 6, it's usually pretty extreme. Well, yesterday we had one in euro yen. It was -7. And then the day before that, we had one in the euro dollar that was -7. So what I wanted to do was show show you guys when you know, when we've gotten these extreme readings on the euro dollar of positive 7 or negative 7, specifically negative 7, because that's what we got here. Okay, so you can see we got a negative 7 reading here on Monday, okay, as indicated by the red bar here. Let me make sure that this goes back far enough. Okay, so it goes back, well, back 15 years, okay, 20 years. Previous instances of getting a negative 7 for the let's see. Okay, where are we at here? So going back, you can see how rare this is. It really happens. This was a positive 7-day, okay, in January of 2011. So act as a breakout bar. We were coming off of major lows at that point. You need to, obviously you have context for these things, whether you were in a trend or what, which way you were trending. This was the most previous negative 7-day here was the flash crash. It was May 6th of 2010. Okay, you can see what happened. Obviously, the next 2 days you had some insane mean reversion and the market continued lower. Okay, so that's one instance. As I said, there's only been 4 instances ever, and since the euro came into inception, that we've had readings of 7, at least 7. This was a positive one. Again, was kind of within a range market. Actually, was not in a trend. All the down ones have occurred within pretty big trends, I should say, except for this one in November of 2006. Okay, within a range, nothing special. And then the only other one that we got was actually in 2005, in June of 2005, and much like the flash crash and the current one, they were in a pretty sharp downtrend, and they were led to some exhaustion. Okay, I think that's the only one that we had as far as the negative ones are concerned. Yeah, as far as the negative ones are concerned, that's it. There have been some positive ones, as I pointed out before. So, there have only been, again, this is now the 4th time we've gotten a reading of negative 7. Okay, the previous 3 led to, in this case, you had some downside in 2006, and then it was almost fully retraced, and then you went lower. And this one, it was consolidation right away, and then it went lower. And then, of course, in May 2010, it was a very quick mean reversion retracement, and then we went lower. Okay, this one right now, we've gone lower, but it's very interesting to note, I guess, to me, that this is just another indication of just how extreme things are. Okay, Euro yen. We had a negative 7 reading yesterday, right? And this, we haven't had too many of these readings either. Okay, so negative 7. This was a positive 7 reading. This was last year at the high. Actually, it was December of 2013, December 27th, 2013. We had some readings back here. These were negative 7 readings, all the way back in May of 2012, and then those were pretty big bottoms. This was one in 2011 within a broader downtrend. You did get an immediate pop. My point being is that these, these exhaustion indications are, the readings of 7 often give exhaustion signals before you go. This is March of 2011. This is within a downtrend here in 2010. You got some readings here in 2009, okay, that were kind of towards market lows. This was right before a breakout in 2008, of course. And this was in 2007. This was actually the very beginning of the crisis in 2007, in which we got the top of the carry trade the summer of 2007. We started getting really big volatility. And these were more or less, into exhaustion lows. Exhaustion low here in 2006. Here's one that was a very minor low in 2003. And one fairly close to lows in 2001. And looks like there was one here back in 99, January 99. So after looking at all these, obviously context is key, right? The ones that tend to be really important turns, if you will, or lows, are going to be, within the confines of an extended trend, right? And obviously with the euro yen, it's a little different because we're coming off of highs here. But with the euro dollar, we've been in a very extended trend. So it's just another piece of the puzzle, I think, that tells us, or tells me, that the euro may indeed be primed for some sort of shocker, if you will. And I want to show you what we're looking at here now on the short-term euro dollar. I've got some different stuff that I've put up that I'm following on a short-term basis for the euro. So the gray lines are what we've been following for some time, right? These gray lines, this is again the slope that had gone off of the, there we go, the slope from the June and October lows, okay? And again, on the swing page, I kind of explained all this, looking for this to be resistance and everything. Well, I put up another chart this morning as I was doing some work and kind of noticed that we had another little steeper slope, okay, that might come into play for support over the next day or two, especially in light of the fact that FOMC minutes are today, okay. The 117.60 area, that could be an interesting level. That's the lower parallel here today from this structure, okay. This is the high from the October 15th high, and then the low from November 7th. And then the high from December 14th. Okay, and the median line there, you can see how much trade occurred around there. I'll be looking for this level again to provide resistance for another short, at this point. But, if the market trades down to 1760, these lines are up near 120. That's a lot of room for a long position as well. Obviously, you need some courage to put on a position like that. But that's what something that, I'd definitely be willing to do. The reward to risk is certainly right, and you get the right price level. You have a higher probability, of course, of this thing continuing in your favor initially, then you can go to break even and all that good stuff. So that's what I would be looking for potentially even today in about an hour or so with FOMC, is the 117.60 area. Okay. We also have at that 117.60 area, again, one of the new subscribers actually put up today a account. I proposed a possible triangle here, and he proposed that maybe this is actually 1, 2, 3, 4, 5. That's certainly a possibility. If that's the case, then maybe we actually do have a low in right now. Okay, but another level that's near that 117.60 area is 117.72, which is the 200% extension of the range that we had on Monday, right? There's 3 fib extension levels, okay? You could call them, I guess, retracement levels too, but it's when you draw it and then you extend off of the level that you break. There's 3 to watch. One's the 127.2, one's the 1618, and one is 200, okay? So all that means for 200 is you're taking this distance and subtracting it from this low, okay? It's just the, the prime extension of the range that you just had. So you can see that both the 127.2 and the 118 and the 1618 have actually provided support. Okay, this was yesterday at right at the roll, right after 5 p.m. New York. The market came right down into this level at 127.2, the 118.46 level, and then bounced overnight. And most recently, we've bounced from pretty close to 118.10, the 118 figure. Okay, so that is something to keep an eye on. Bottom line here, I don't have a trade in the euro dollar, but FOMC, if you're willing to do it, and the market comes out and tanks into 117.60, 117.16, 117.1670, that would be an area to look for a low. Okay. Taking a peek at the pound. So we were following throughout basically most of the Puja says the low week close from 2000 is also in the same area, euro dollar. Okay, that's some good intel to have. Thank you. Yeah, so it's pretty amazing. The euro hasn't responded to any level that we've really expected it to respond to. So it's been a trying time to be patient, just wanting to buy the euro down here. But hey, that's what you got to do. Looking at the pound dollar, we've been following this triangle, this running triangle, for most of the last month and a half, I think. Remember, I put up the idea of selling 156.07. Obviously, I didn't put that in as official trade because, it was going right into the very end of the year. So once the year, we came to a close, we opened up somewhere down here, and it's just been tanking ever since. So we came into a parallel here. We've continued to go lower. This black bold line, 151.04, we're getting back into that level. So perhaps we actually, are finding some support down here for a counter trend move. The new levels that I'm probably going to follow as far as the British pound is concerned. We've got these levels that are, I put on the 2 days ago, okay. At this point, I think 152.70 to 153.20 is going to be your fourth wave area, okay. These are simply former fourth waves. That's, structural resistance, if you will. What I want to take a look at, you can kind of imagine a new steep slope, right, with these 3 levels right here. Okay, there we go. So you can see how the median line cuts through some of these levels, some of these price levels. In fact, the low actually, lower parallel cuts through recent lows. Okay, so this might be a level or a zone to watch for resistance now as well. This, interestingly, this 52.70 would come into play at the very end of today. Okay, so, if we were to get some sort of a riff off of this for FOMC, then I would be looking at 52.70 as resistance for the pound. Okay, but in general, 52.70, 53.20 likely to serve as resistance, I think, for a fourth wave, any sort of rally. Looking forward to prove corrected before we do get the final low. And just for fun, let's see where the 38.2 would come in, and lo and behold, it comes in at 52.70 anyway. So this would be a nice place, if you will, for the euro to, or the pound, well, and the euro for that matter, to find lows before we do get that final fifth wave low. Okay. And as far as a level for the final fifth wave low, there's a triangle objective down near the triangle objective. We've gone through both triangle objectives so far, almost 52.20. There's one near 49.37. Okay, so that might be worth a peek. 149.37. $149.37, and is there anything over there? Not really. These are the lows back from 2013. All right, so those are some thoughts on the euro as well as the pound. What I want to do is now go through some of the specific trade setups that we're looking at right now. Dollar yen has already come into resistance. Okay, this is a short-term chart here. Been following today. This is a 5-minute chart, but this is the same chart that I showed you guys in last night's update. Okay, the 60-minute chart with the outline 119.40 to 119.80 resistance. Okay. This is a trade that I'll be looking to put on during FOMC if we get, potentially maybe one more push, if an initial reaction, okay, maybe perhaps up into 119.80 or so. 119.80, you got the spike low here from the 2nd, okay, January 2nd. You've also got 119.87 is the open for the year as well as the month, okay? Here, so 119.80 to call it 120 or so. And finally, you've obviously, you've got this upper parallel up here where you can see the lower parallel yesterday didn't quite get there. Remember, we went long yesterday at 118.60 intraday with a 118.80 intraday with a 118.60 stop. Part of the logic of that was we had come into what was viewed as a support level, responded to it, and then the low hourly close there was 118.79, so 118.80 entry. Figured we'd be able to get this push up into here, but we took a small loss with the market coming all the way back down towards 118.02 or something like that. Didn't quite get here. Got the hourly reversal like the 1 o'clock hour, continued higher overnight. Okay, but bottom line, we've entered a resistance zone. Be looking for a top in dollar yen, specifically from 119.80 to 120 or so, and then for a pullback, probably back towards 118.80 or so, this former low back here. Okay. Now, it's difficult to say, whether or not the bigger picture in the yen has turned over yet. We do have we are showing signs of momentum here being a bit different. Obviously, on the hourly chart being the first, okay, that's going to really show you a change. The hourly chart we did start to make some oversolds, okay, below 30 here, and on this most recent pop, you can see that RSI is stalled at 60. So that would be your first possible sign that the larger trend has turned over. It's obviously a very short-term sign. The more reliable one is going to be your 240-minute trend, where you can see we did stall at 60 here. We did get oversold here. So if RSI on the 240 can stall near 60 or below, that would be an even better even better sign for a broader turn in dollar yen itself. Okay. So dollar yen, that is what we're tracking. On the near term. So with FOMC specifically, got my eye, you know, and the line, this lines up with 119.80 next hour. Okay. So 119.80 to, you know, 120 would be looking to sell a spike, you know, with a fairly tight stop, probably something like 120.30. That would protect against, you know, any test of this upper parallel up here over the next couple hours. Okay. With another trade we're looking at, obviously Kiwi dollar, right? We've been on this one for a while. I still think that you had, this is the chart from last night, I still think that the big opportunity is going to be on the downside. You know, I think all the consolidation from September will eventually be resolved to the downside. But the shape of this consolidation, the shape that it's taking at this point, you know, may very well be a triangle. And again, with the triangle, you know, it could be very well A, B, C, and that we get a thrust higher up to the 79.1050 region, then we go lower, then we go a little higher, okay, and the market quiets down substantially, and then the market totally collapses. If we look at the seasonality in Kiwi, okay, it really doesn't turn exceptionally bearish. The first bearish point would be after this week, right? So, you know, maybe if we get a pop for the rest of the next 2.5 days, you know, that would allow an opportunity to fade up, you know, in the 79.1050 region. Okay, that's certainly a possibility. The market, the bigger seasonal points. Okay, and this is, you know, shorter term 5-year here, but the 5-year really starts to turn bearish in April. Okay, and you can see last year we did top up here in April. This would be last year's price chart. Okay, going through 2014 through 15. Of course, the bigger top ended up coming in July, but even the year prior, you can see we also topped in April. So there's something to that. The very big, you know, weak portion of the year for Kiwi, again, isn't really until about April. So we may very well be in a consolidating pattern up until that point. But focusing, obviously, over the next couple days, near term, I'm going to be watching for the 76.75, 70, maybe 77.05. That's the 61.8 of this to provide support. Okay, so again, with FOMC coming up here in about an hour, this would be something that might be worth looking into as far as if the initial reaction is lower, would be looking for support from Kiwi, you know, near 76.75 specifically, maybe a little higher at 76.05. Okay. Let's take a look at the EURUSD. This is potentially a much bigger opportunity. So if we look back at the scaling far back here, we pointed out some pretty big levels here for the EURUSD as far as turns are concerned over the last several weeks. You know, pointed out this line, okay, which crossed through very, very critical inflection points from October of 2012 and February of 2013, crossed through the low to the tick in November of 2013, crossed through some consolidation before a bigger breakdown here in June last year, and then it did get the high just 3 weeks ago. All right. Well, now we've dipped to a point where we should be looking higher, okay, and you can see that median line structure, okay, that goes from this point, okay, down to here, down to the November low, up into the January high, ended up, that lower parallel caught that low, that median line was pretty useful for inflection points on several occasions. None better than, of course, the October high and then the breakout here in December. Okay, well, we come right back to that level. So that's, the entry, the way to get long, or the way that I suggested to do it, is to put an order at hourly reversal support, and this is where we come in with hourly reversal support. What the heck is hourly reversal support? So just like daily reversal and daily, daily and weekly reversal support and resistance levels, being the high bar or low bar of a, of a specific move, hourly is the same thing. Okay, it's the low bar for the move, and it's the close of that level. So the close of the low bar for the move is this one, quite obviously, and it is 146.31. I find that these work better when they are, reversal levels themselves. Like, in other words, when you have a long wick. Okay, and obviously you don't want to get in the habit of looking at hourlies all the time. It's really short term. But when you're trying to figure out a way to catch a bigger turn, it's one of the better ways to do it, I think, with to get a really tight stop. You're going to get stopped out of plenty because the market will take out the lows and come back and blah, 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 but the stops will be really small over time. You'll be able to catch much larger gains with really good entry, and you'll be able to move your stop to break even a lot of times fairly quickly because the market will move quickly off these levels. Okay, just to give you some very quick examples of, I've been kind of tweeting some of these on the squawk, but some quick examples of some of the hourly reversal levels, right? So the euro yesterday spiked up into one. Okay, the hourly close here, that was the high for the move. That was 119.55. We spiked into it yesterday. Okay, hourly reversal support here, okay, as well as here, okay, those didn't hold. We were looking at, let's see, euro yen was one too. Euro yen was one this morning, actually. The low for the move obviously was yesterday, last night, Asia. Market rallied overnight. We came back and tested it this morning at about 7 a.m. in New York time. Okay, so it's not. This is by no means just a strategy. It's kind of a tool to help find support resistance. When you're looking to get into a position. So with EURUSD, we're obviously looking to get into a long because we're at such big levels here. Okay, so. It's not like you just look at the chart and you're like, well, there's the low hour. No, it doesn't really mean anything. You have to be at a big level first, okay? And EURUSD is at such a huge level, okay? It might take a few attempts to get long. Look, if this doesn't hold, if this low doesn't hold, 146, then the next support is probably going to be this parallel, the gold line, okay? Probably going to be that, and that's not until, roughly 145 over the next couple days, okay? But there's other stuff here, too. So that's why I think it's worth taking a shot with EURUSD. See this move, the most recent move off the low. The most recent move off the low, 46.45 is 61.8. You can see we've spiked down through there and come back the last couple of days, okay? And to give you a sense of, possible upside, let's say that even if, even if you've got, even if this is a broader downtrend or this is an impulse, okay, your first resistance, probably doesn't come up until about at least, I call it, 148.50 to 148.60, which would be the former fourth wave here. And even then, with such a big level that we're at, I'd be looking towards 150 more than likely, okay, with EURUSD. So EURUSD, just in a nutshell, it's the really big price level that we're at, and that's the hourly reversal level is kind of one of the ways I think that it's we can try to get into it. Without the presence of a short-term pattern here, like a head and shoulder, like a very inverse head and shoulders, or just a very short-term uptrend to work with, then that's how we want to get in initially. Now, let's say that the market continues higher from here and never gets down into the entry point. Okay, that's when you go and you try to find the slope of the short-term move. So, let's say we continue to bounce along and the market continues higher here and gets up to this level and then, starts to drift off. Then we would look and see maybe this is the right slope line to buy into, and that way you can buy into it with a fairly tight stop. Okay, and then we can target those 48.50 to 150 areas. Okay, in the market. Okay, but we'll deal with that if we need to. What else? Oh, you know what? Dollar Mexican peso is interesting because it's one of the 4 currencies that has an absolutely insane sentiment right now. I'm referring to DSI, which is the daily sentiment index, which is published by, it's a poll of futures traders, but it's well known, and it oscillates between 0 and 100. I don't think I've ever actually seen 100 or 0, but the US dollar itself is at 98 right now, which is a record, tied with 2010 when it was at 98 as well. Okay, and the 4 most I should say the 4 most bearish, but so bearish they're bullish, if that makes sense, readings are on the Mexican peso, the euro, the Swiss franc, and the pound, and those are all below 5. Okay, so with that, we've got kind of reversal watch, if you will, with those 4 currencies. And the Mexican peso really caught my attention because if you look at yesterday's swing update, you can see it was in the scans. We had a J spike. We had a big reversal in the dollar Mexican peso yesterday, and the market is following through on it today. So might as well follow the Mexican peso. All right. Well, here we are, Mexican peso. This is the daily chart. And if we scroll out, we can see that this structure, we have banged up against the top of this thing twice now. Okay, that's the upper parallel. And, it's a good place for us to turn lower. I want to actually see what the okay, so we do have divergence, but again, it's still an elevated RSI, so it's nothing spectacular. So on reversal warning with the dollar Mexican peso, and the close yesterday is 14.8910. $14.8910, so it's right there. And the close of the 240-minute bar. Okay. All right, so there's the resistance. We actually traded up into that this morning during Europe. But if a larger drop is underway in dollar MEX, what we look for here, okay, obviously you want a little more weakness, to suggest that you kind of change behavior a bit. And then what you look for is with this structure, okay, the median line structure that goes off the high, this low, and this high, these 3 points, you look for resistance at this line, okay. It's definitely, given the potential for a very significant pullback in the dollar, based strictly on the sentiment readings. You know, something that I would keep my eye on moving forward for the next 2 days. You know, with NFP and everything on tap. You know, I'm very reminded of last year at this exact same time. Let's pull up a chart. I want to show you what dollar yen looked like last year at this exact same time, because the setup is somewhat similar. The setup to dollar MEX now might be similar to the setup in dollar yen last year. Okay? All right, so last year, obviously we were in a sustained bull trend in the dollar yen. And you remember, this was the first day of the year. We reversed. Okay. We then had NFPs on the 10th. That was this day here. The market spiked higher and then tanked. Okay. But then a great setup came on the 23rd. Why? Because we had this is daily reversal resistance. In other words, the reversal day close. We kept banging into that level and then coming off. Bang into it and coming off. And finally, we banged into it for one last time, and the market fell a couple hundred points in 2 days. Okay. We have had somewhat of a similar thing here with the dollar yen this year, because you can see the reversal levels held, you know, throughout the holiday period from the 23rd up into this year, and we've come off again. So that's just another reason why I'm actually looking and favoring the short side in the dollar yen. Even if this, you know, right here is, say, a broader triangle or something that's underway, you know, you can envision us trading lower, higher, you know, contracting. Even if that's the case, there's still a couple hundred points left on the downside here, probably towards 117 or so in dollar yen. All right. But my focus and my concern isn't necessarily where the forecast, you know, is, but it's on getting into a position with a tight stop, and so I don't get hurt if I'm going to be wrong, but it gives me, you know, potential to get a big gain. So that's where we're at. But again, follow dollar MEX closely, because you know, we end up with that reversal, this reversal here. We end up with that reversal, and if the market wants to come back and test it, you know, sometime maybe next week, this intersects on Monday, right here, then we have a chance to maybe get into a position, you know, before the market comes off significantly. And, you know, the big support for the dollar MEX is probably, again, still not until this line at this point, which, you know, it might actually end up being near 1437 or so, the former low here. But bottom line is we're going to follow this median line. We're going to see where the dollar Mexican peso seasonality looks like. And as you can see, for the most part, it's pretty bearish until April as well. Okay, just as Kiwi remains, you know, somewhat stable, if you will, up until the April period. The Mexican peso is the same way. Okay, so first quarter, you know, don't get too jacked up according to the seasonality, you know, barring a very clean break on Kiwi, but this is what we'll be looking at. All right, where are we at? Let's see. Brendan had a question on pound CAD. Possible triangle, wants to look at an hourly. Sure thing. Take a look at that. Pound CAD. Okay, so looking at the hourly chart. Right, okay. So, again, I don't look at these all that often as far as the I shouldn't call them crazy crosses or anything, but this, by the way, crazy to look at the, just, it doesn't matter what the instrument is. It could be, take any two crosses and doesn't matter. It seems like they always come into play and they're useful. It's the simple yearly open price, which is in magenta, right? Those always work out really well. So, each time we came into there in September and then in November, each time we came into there, the market reversed and went higher. You could probably make a strategy just off of this. So with this, Brendan, what I want to do is look at, I'm just going to map out some levels really quick. So I want to see where the fibs come in. Okay, we've actually come into the fib zone now already. Okay, 61.8, we're right here. Going to see where so this could be a level to watch down here, more or less. $177.80. And then you were wondering about a triangle. So I'm not exactly sure if you're talking about a triangle potentially forming in, like since September, possibly. Is that what you're saying? That could be a possibility. I'm under the, just in general, that based on some of these setups, like EURUSD, for example, that the Europe against commodity complex is, kind of trying to turn higher a bit. So, when I look at pound CAD, or, I'll naturally, my inclination is to look for support. And so if I look at pound CAD, I know we've just come into the 61.8 of this rally, but you might get a chance near 77.80, which is the former low, and would intersect with this lower parallel down here. And incidentally, we've got the 100%. We get two equal legs here at 77.24. So those seem to be the important price levels, I think, for pound CAD, 77.24 and 77.81. Okay. All right. Let's see here how we doing on that. Oh, well, dollar yen has started to come off a bit as the market is pressing into our 1940 to 1980 resistance zone, pulling back. Again, we've got the minutes here in just about 12 minutes. We've got the Fed minutes coming up from its 16-17 meeting. And of course, I was actually flying when that happened. Remember we had a euro long and a dollar yen short. Did not work out. The euro stop was very tight. Dollar yen stop not so much, but it'll be interesting what the reaction is. You know me, I'm not too big into dissecting who is on the, who's on there, the FOMC, who's voting this year and who's not, blah, blah, blah. But somewhat interesting to note that with sentiment so stretched with the dollar that we very well could get, some sort of a surprise. And if there's going to be, if the market's going to latch on any sort of surprise, the market's so one-sided. Maybe it's the fact that maybe there's maybe their meetings, maybe they were more dovish than people expected. Okay, we'll see. Whatever it is, I think the way to position is going to be on the dollar short side eventually, looking for again 119.80 to 120 in the U.S. dollar against the Japanese yen, resistance up here, 120.30 stop, and then eventually euro dollar trying to find some sort of a low, and Kiwi dollar also trying to find some sort of a low near 76.75 to 77.05 for our bigger run up towards 79 plus. Okay, so those are the setups that I'm most interested in here, for the rest of the day going into FOMC here, really the dollar yen, of course, and Kiwi dollar, and a little bit that Euro Aussie. I'm perfectly fine leaving the order in at 46.35. It's a tight stop. If we get triggered on it, and it continues our way quickly, it'll look to go break even, take it all the way up towards 148.50 as a first target. Okay, all right, so that's it here for today. If you have any questions at this time, I'd be happy to answer them. Just let me know, and I'll go over whatever it is you want to go over. Well, doesn't look like we have much in the way of questions. All right, so we got FOMC coming up here. 8 minutes, just the minutes again. This is the minutes from what already happened, but with the market so one-sided, would not be surprised to see the market latch onto anything to push the market the other way. We'll see. All right, so I'll tweet out any entries that I'm putting in or orders I'm putting in as the minutes come out. But just on your own, I want to stress to watch the level up here in dollar yen. Okay, 1980 to 120 possible. Sell a spike if you get it. 120.30 stop, and then look to take that down back towards 119. Okay, and other than that, guys and gals, have a wonderful rest of the first week of the new year. Be out with a swing update in a couple hours. All right, take care. Bye, guys. Yep, Brian says just logged on. We'll review the webinar online. Yep, we'll have it up. I'll have that webinar up here in just a few moments, hopefully. Just got to get it rendered, and then we'll have the archive up. I'll tweet it out. Okay? All right.